The big announcement we've been waiting for was just released today. Also, some new details out of the administration, and a new report just released specifically focused on the low income, which I'd like to share with you right here in this video. We have a lot to talk about, and I have all the details as well as everything you need to know right here in this video, so let's jump right into it. Alright, so first off, I want to take just a minute here and offer a little bit of additional clarification on that video from earlier today. Now, I was specifically talking about this new bill that was introduced by two senators, one Democrat and one Republican, out of the state of Ohio, Sherrod Brown and Rob Portman. Now, these two people came together on a bill which has bipartisan support, like we talked about in that video, where they would actually be raising the asset levels for SSI, Supplemental Security Income beneficiaries. Now, I did see a number of comments on that video. Many people are excited about this, but at the same time, I also did see some comments coming in saying, what do we care about this? We want more money. We don't care about saving more money right now. I totally get it. Here's the thing. Like I said in the video, this is essentially like the floodgate that'll open up more reform on all of these programs. Remember, this is what they're doing right here in this new bill is also one of the provisions that they have within the SSI Restoration Act. So the way that I'm looking at this is, yes, it is one of the provisions. It is probably one of the provisions that all of us care about possibly the least out of all the SSI Restoration Act provisions. But the deal is, at least this is their way of kind of tiptoeing their way into reform on these programs. Because here's the thing, once they open up this whole process of actually reforming SSI, they're probably going to look at the whole situation and say, look at this, we haven't reformed this program since 1989. That's the last time it's had any type of major reform to it. They're probably going to look at it and say, you know, raising the asset levels is very important, but at the end of the day, increasing monthly benefits is ultimately the most important, and of course, removing the marriage penalty, which we've talked about so many times. So, I totally understand your frustration. I totally understand what you're saying as I've been reading down in the comments section, but at the end of the day, like I said in that video earlier, we need to watch this very closely because I honestly think this is probably what's going to be to open up the floodgates on additional relief and, of course, reform to not only SSI, but potentially even Social Security, retirement, SSDI, survivors, VA, SSI, all of these different programs. So again, we got to watch it all very closely because it's likely that they may bring reform to all of these programs simultaneously through Congress. Anyway, hope that helps to better clarify a little bit more here from that video a little bit earlier. But again, as I get more information, of course, I'll bring that to you. But the best part is there is bipartisan support on this. That's very good because we generally don't see that all that much these days, right? Anyway, I'll keep you posted as I get more information. All right, so let's jump into the update in this video, as there's a few key pieces of information that I want to talk through right here in this video that, of course, were just released. But really fast before we do, if you're new here or if you haven't done so yet, make sure to hit that subscribe button right down below the video. Things are changing very rapidly right now. There's a lot going on. Changes are happening very fast. There's a lot of different pieces of legislation that are being introduced, that are being proposed, that are floating around Congress. There's a lot of talk about money, benefits, checks, all kinds of different things out there. I'm doing all the research on your behalf. I'm boiling it all down into these short videos so that you can stay updated every single day with everything going on right now. And anytime something comes out that you can take advantage of course, I'll be right back here for you, breaking it down, making sure that you have all the information you need so that you can grab any money, benefits, programs, reform, anything else that may be popping up right now. So again, thanks so much for joining me. Please make sure to subscribe down below if you haven't done so yet. Totally free to be here, totally free to subscribe, and of course, totally 100% free to watch all the videos. So anyway, thanks again for watching. Let's get right into the rest of the updates here. All right, so first off, let me quickly run through a new report. Yes, again, another new report. There's a lot of them out there, but I want to share this one with you because, once again, it helps solidify the actual situation that is going on in this country right here, right now. I've seen numerous of these reports here over the last week or so, and again, I want to break this one down for you because it gives a little bit better statistical data of what is actually going on in this country. So here's the thing. As I've been talking about recently, there's been a lot more people going to food banks and food pantries to get additional food right now simply because increasing prices on literally everything, the money's not going as far and you can't get enough food these days. Well, here's what this new report is actually showing. Across 200 food banks across the entire United States, 65% of them are seeing an increase of new people coming in right now and over the last 3 months or so, getting food and additional support. The average food bank is seeing increases of people by about 15%. Now again, that's an average. One may have an increase of 30%, another one may have an increase of 45%, another one may have an increase of 2%, but it all averages out across 200 food banks across the entire country. 65% of them are seeing increased traffic of at least about 15% on average. Again, very interesting stuff, right? Well, check this out. The report goes on to say that meat prices in the last 12 months, and again, meat prices averaged out, are up 14%. At the same time, milk is up 13.8% and eggs are up over 12% just in the last 12 months. Yeah, again, this is just a couple examples, but the list went on and on and on, talking about many different food prices. So I'm not going to get into the whole list, but I think you can see the trend here. Things are significantly higher, right? And again, we can't really go that long without food. I mean, this is something that's very important to everybody, right? Anyway, just want to share that little report with you because this is kind of some of the things that I'm seeing out there right now. It's kind of a massive concern, just being real right now, right? This is something we got to watch very closely because especially with all the talk about food insecurity here in the country, as well as global food insecurity or global food shortages, we might be in for a little bit of a situation going forward. But again, only time will tell. I'll continue watching it, and of course, I'll bring you those updates. All right, let's quickly talk about the announcement that came out today. Now, this is one of those big announcements that, again, I know some of us here in the community may not care all that about, but at the end of the day, this is something that is also very, very important. So the Federal Reserve wrapped up their 2-day FOMC meeting, the Free Open Market Committee. That's what FOMC stands for. Now, they have a 2-day meeting every 6 weeks. They get together and have a 2-day meeting. It starts on Tuesdays and it wraps up on Wednesday, and then the chairman of the Federal Reserve comes out and has a little, long-winded statement and says a bunch of fancy stuff and a bunch of really big, smart words, and then they tell us what they're going to do with the interest rate. Well, they're actually raising the interest rates by a half of a point, so 0.5%, right? 50 basis points. Now, it doesn't sound like that much, but actually, this is the biggest increase in interest rates since 2000, the year of 2000. 22 years ago was the last time that they raised interest rates by half of a point at any given meeting. So I guess by historical standards, this is actually a very big raise to the interest rates. Now, here's why this is important. Any type of adjustable interest rates that you may have right now on anything. It could be an auto loan, it could be a personal loan, it could be a home equity line of credit, it could be an adjustable rate mortgage, it could be a credit card, pretty much you name it. Anything that has any kind of adjustable rate interest that is not a fixed interest rate, like a 30-year fixed rate mortgage, for example. That's not going to be touched. That's a fixed rate. That's not going to move no matter what happens to rates. Rates could go up to 58%. Doesn't really matter. A fixed rate mortgage will stay the same no matter what. However, any type of adjustable rates, like all those different products that I just mentioned, pretty much all those are going to be moving up in price or in interest rate here. That just means we are paying more for any debts that we have. Not a good thing, right? Now, the whole idea behind this is to slow down some of this inflation. Unfortunately, this little bit is probably not going to touch inflation. So it may slow it down a teeny tiny bit, but the deal is they've got to raise rates significantly higher than this, and they're likely going to be doing that the next however many meetings that they have through the rest of this year. 5 more meetings or whatever they have this year. There's going to be a lot more of these interest rate hikes. So this is something that's very important because it means the cost of borrowing money is getting more expensive, right? That's basically what it comes down to. When we are borrowing money, whether it's floating it on a credit card or maybe an auto loan or any of those other products that I mentioned there, basically just the cost of money is going up, right? So yeah, we're kind of getting hammered from multiple directions now. So inflation is getting us from one side, and interest rates, if you have any kinds of debts or payments or anything like that, getting us from the other side now too. So anyway, that is a big decision that came out today. Now we have to watch on Friday as the non-farm payroll number will be coming out as well, and that'll be another big another big report that we need to watch very closely because that's going to tell us what the labor market did last month. I'll keep you posted on that one as well. All right, so let's quickly talk about the administration and this new piece of detail that they gave us. All right, so just a couple days ago, or maybe it was yesterday actually, or maybe 2 days ago, we got some new information out of the administration talking about their cancellation of federal student loans. Again, about 43 million borrowers out there collectively that have $1.6 plus trillion of outstanding federal student loans. All right, but here's what we learned about this. So originally they were talking about canceling $10,000 of federal student loans per borrower through executive order. Well, that is still on the table. That is likely how it's going to be happening. $10,000 per borrower through executive order. So should be a relatively quick process, but here's what they're going to do. They're going to be capping the income thresholds. Now, I'm guessing this probably doesn't pertain to all that many people out there, but again, it does pertain to some people. They're going to put an income threshold on anybody earning under $125,000. So, provided your income is under $125,000, then you'd be eligible for the $10,000 of basically loan forgiveness or loan cancellation, right? So it's not really, basically they're just going to sign it. The president's basically going to have an executive order. He's going to whip out his pen in about 2.4 seconds. He's going to have it signed, and then it's a done deal. Canceled. Boom. That's it. Pretty much $10,000 is gone, right? Just literally disappeared. So that's basically how that whole thing is going to happen. Anyway, the whole idea behind this and the latest details that I have on this is that they're likely going to get this thing done probably within the next couple weeks here. Now, again, that's what they're saying, but whether they actually get it done in that amount of time, who knows, right? Who knows if they will actually get it done. So anyway, that is what the current talk is right now. The income thresholds is where they're currently at. And again, there are multiple different progressives out there that are pushing for $50,000 of federal student loan cancellation. But again, I'm going to be honest with you, just like I was the other day in that other video, I don't foresee $50,000. I just don't see it. Just being real with you, based on everything that I'm reading about this and all the research that I've done on this, I just cannot foresee $50,000 being canceled. $10,000? Sure, not a problem, but the president is not on board with $50,000, and it doesn't sound like he's really going to budge on it, which is kind of surprising because it seems like the progressives kind of have a little bit of a grip on everything that goes on. So we'll see. Anything could change at any given point, but it sounds like $10,000 is the starting point on everything going on right now. So anyway, as I do get more information, of course, I'll be right back here for you, breaking it all down. But just like I mentioned in that video the other day, there's multiple different dates here that we need to watch very closely. We marked off day number 1, which is this one, May 4th, and the big announcement out of the Federal Reserve on the interest rates. Again, went up a 0.5 percentage point, and it's only going to get more expensive going forward. So the cost to borrow money is only going to get more as we continue on through this year. So if you happen to be in the market for buying a house or anything like that, I can't advise you what to do, but here's the thing. It's only going to get more expensive. The longer that we wait through this year, it's only going to get more expensive. It looks like their objective is possibly to raise interest rates up to around 3, 4, possibly even 5%. So that's going to make a huge, huge dent in the cost to borrow money. Anyway, I'll keep you posted with everything that I find out there. These are some of the top headlines. These are some of the pieces of information that I've been coming across today. I want to share with you, break it all down, as well as offer some clarification, just like I did in the early part of this video. Anyway, hope this one helps you out. Thanks again for watching. I really do appreciate it. Subscribe down below if you haven't done so yet. Share the video and go back and check out any of the other 2,400 plus videos right here on the channel. Enjoy your day. Thanks again, and I'll catch you again.